Good afternoon, everyone. Thank you for joining us for today's session of the Pips O'Clock webinar. You are all welcome. We'll be getting started now. We have an interesting topic to look at today. Today, we are looking at the topic developing a trading plan and strategy. Developing a trading plan and strategy. We'll get to the topic, but before that, I'd like to let you know that this webinar is hosted by Pips O'Clock. We hold this webinar every Thursday, 12 p.m. Nigerian time. That's 12 p.m. WAT. And this is part of the offerings for the members of our community. To join Pips O'Clock, you go to www.pipsoclock.com and then you click the join membership button. As a member of Pips O'Clock, the benefit you get is that you enjoy free webinars like this. Then you can also watch our weekly market analysis within the members area, and also the news analysis within the members area. So we also publish exclusive articles for our members and then share signals on our Telegram channel. So today, I want to get us started for today's session. We have Mr. Ifeanyi Uche in our midst. Mr. Ifeanyi Uche is a Forex coach. He's a businessman. He has been in the Forex industry for many years, and he's here with us today. He will take us through the topic. After a session, if you have any topic, please, you can note them, and then by the time he's done, you can ask your questions, and he would gladly provide responses to them. Again, I want to welcome you. Please stay to the end of the webinar so that you can enjoy the entire session and the topic for today. Thank you so much for coming. Mr. Ifeanyi Uche, you have the floor now.
We have here with the topic before us, developing a trading plan and strategy, with rather a pathway to consistent profitability. Now, it's very, very interesting that this subject is what many people would not want to pay attention to. Why? You may say, well, it's theory. It's theory. Just like some would tell you, well, forget motivation. But there are times when motivation becomes very, very, very essential. And you must want to find someone who motivates you during such moments. So this is a theoretical subject, but it's now the onus now lies on us to put everything we learn into practice. So I'll quickly get into it so that we'll be able to cover all that we need to cover. So we are looking at first the importance of a trading plan. Then we'll look at the objectives. So a well-structured trading plan is very essential for achieving consistent profitability in the Forex market. And by the end of this presentation, I want to believe that you'll be guided through creating your personalized trading plan. Should be able to define your trading goals, strategies, and evaluate, have the evaluation criteria when you make your plans. What are the things you use for your evaluation to know if actually you've followed through the plan? So key takeaways for today, just rush into get into what we'll be going for. We are looking at setting clear trading goals and objectives. So key concepts here cover why goals matter, types of goals, and then of course the SMART criteria. These you already know, but we are bringing them into trading down to see how do they play out, how do they help out a trader in his or her journey. Because the essence of our trading is to ensure that in our trading journey, we are profitable, consistently profitable. Even in a not too good trading day, you still remain profitable because the profitability is in your mind. It is in your mind. So goals, why do goals matter? Goals provide direction. Goals provide motivation. Goals give us a benchmark for evaluating our performance. So without goals, it's just like you have a football competition or match without goals. The players will keep on running around in the field without knowing who the winner is. Or you are doing a sprint race. There is no starting mark, there is no finish mark. It will just be exercise in futility. So goals provide a benchmark for evaluating performance. Goals give you motivation, because when you look at your goals, well, I want to achieve $3,000 in trading with this my $1,000 or my $500. When you think about what you could do with that $3,000, it gives you motivation to stick to your plan, stick to your goals, and don't deviate from it, right? And of course, it gives you direction. Goals will give you direction. Types of goals, you have short-term and you have long-term goals. Short-term goals consist of goals like you set for your daily and your weekly profit targets. And of course, also cover your risk management rules. So as a trader, because everything we are talking about here now around planning, goal setting, and all that is around trading and not outside of trading. You take them to go and apply in any other sphere or area of your life, but here it's about trading. So when you look at short-term goals for a trader will talk about his daily goals, weekly goals, like the profit targets, and then what are the risk management rules for me, even as I'm going for these targets. Because somebody said that the forex market is like a street filled with money, but then to pick those things, you have to deal with crocodiles. So that's the risk involved. So how do you manage and come out victorious without shedding blood? Long-term goals will now include annual return objectives, account growth targets. All right. So when you're looking at annual long-term goals annually, first of all, it has to be about what are the objectives for returns. You get it? Oh, I put in 1 million. I am expecting 10% return, 50% return, and so on. And then my account growth target, okay, I begin with $100 in January. By December, after taking some profit, I want this balance to be 500 or 1,000. That becomes your long-term annual goal or objective. So the SMART criteria in your goal setting, still the same SMART you use in goal setting. We'll bring them here and look at how they will play out. Okay, your goals should be specific. For example, now on a daily basis, how many pips am I targeting per trade? Okay, and this should be set alongside having an understanding of your skills level. What's my target per trade? What's my target per day? What's my target per week? All right, be able to measure that. And then, of course, once you are specific about it, it's measurable. It becomes measurable. You have put numbers to them. Once you put numbers to them, they are measurable. And then make sure they are achievable. For example, somebody who is just starting out and you just finished demo trading and you are setting a goal of making 1,000 pips a week. Is that achievable for a newbie? You know that it's not achievable. He may be lucky to win once, but then he might give back 10,000. So it has to be measurable, it has to be achievable, and then it has to be relevant. So the goal has to be relevant to trading. It has to be relevant to trading. You can't come and be talking about maybe writing letters or emails for companies, and you start setting goals that are outside of bringing them into trade. No, it has to be about trading, relevant to trading. For example, now you want to develop skills. It has to be skills about being able to decode what's happening in the market. Maybe analysis skills. It may be prediction skills. It may be maybe risk management skills. So yes, the goal has to be relevant. The goal shouldn't just be about target. You should go beyond target, even onto your skills. And of course, when you set them, they have to be time bound, meaning, is it in 1 month? Is it in 1 week? Is it in 1 day? Is it in 10 years? Okay, so you have to follow this SMART criteria for your goals. So how do you now choose a trading style while working on your trading plan? Now let's look at the overview of trading styles before you choose because by the time you are setting your drawing your plan, your trading style will come in. But you need to have an understanding of these trading styles and their pros and their cons. So that's why it's important to know them. So first, you have scalping, you have day trading, you have swing trading. All right, at least for retail traders like us. So for scalping, it's aimed at you taking quick trades, and these quick trades, position you for small profits. Usually, you can enter scalping trades for seconds and minutes or minutes. You just saw the opportunity, you grab it, under a minute, you're out. That's scalping, and maybe 5 pips, maybe 2 pips, 3 pips, 10 pips. Sometimes, yes, you may enter a scalping trade within that 1 minute or less, it could give you 40, 50 pips. Yeah, because if there is a breakout that would actually pull that value, particularly if you are trading highly volatile instruments. The pros of scalping are that, one, they provide high frequency opportunities. You can trade several. Several years ago, I met a trader, an Indian trader, who said she's a scalper and that she will take up to 300 trades in one day. So you can imagine taking up to 300 trades in one day. So, and when you are a scalper or you use scalping as a strategy, you have less exposure to market risk in the sense that you are just in and out, in and out, in and out. You are not there to stay for long, so that whatever profit you have made, because we evaporate, because you can make up to 50 or 70 pips, and it will evaporate. If you still stay longer, you are still waiting for it to get to 100 or 150. It can happen. Cons, it requires constant attention. You must be there for the period you are trading. And of course, it also leads to high transaction cost, because each time you place a trade, there's a cost to that trade called spread. Spread is a fee you pay as you place a trade. So each time you place trades, 1, 2, 3, 4, 5, you can imagine placing trades worth, trades in frequency up to 300 trades in a day. And then you are paying 3 pip spread. Say it's maybe $1 a pip. That's like $3 a pip times 300. You can imagine how much you would have given away in terms of transaction costs. What if they also charge you extra fees for placing trades? Those are the cons. So in day trading, trades are initiated and closed within the same day. You don't roll it over. You don't allow it to stay beyond 11 p.m., 11:59 p.m. So you don't allow your trade to roll over into the next day. So that's day trade. Any trade that you just open it in the same day and it closes the same day is a day trade. So there are traders who are day traders. Most of us are day traders, even though a bit of scalping and swinging also come into play. But if you want to maintain day trading, you don't want to gain or lose any funds from swap. Swap can be positive or negative. So it means that even if you open the trade at 11:55, you want to make sure you close it before 11:59 is over. So that's for day trading. Pros is that, one, it helps you avoid overnight risks. Talking about overnight risk, I think it was in 2012 or 13, if I could recall very well. 2012, I think. If not 12, it will be 11. There was an earthquake in Japan, March 2011. There was an earthquake in Japan, and if you check your calendar, your chart, you may want to set your chart on maybe weekly or daily. If you check it on weekly and you scroll back to March, either 11th, it's someday in March 2011. Now, something happened that day on GBP, JPY, in fact, JPY pairs, or literally all JPY pairs, GBP, JPY, USD, JPY, and so on. Now, because of the earthquake, what happened was that by the time we went to bed in the night, and woke up the following morning, something had happened. There was a big move. I want to see if I can find that. Let me see if I can find that, because I need to really explain that so you understand why when we say you have to, if you are a day trader, you have to, the advantage is that it helps you to avoid overnight risks. Let's see if we can find that. This is 2020. Let me put it on monthly first. Okay. All right. So now this is 20. Wow, that's quite a long time. Let's leave that so that we doesn't let's leave that. But then what happened? By the time we woke up in the morning, all GBP, JPY, all GB, sorry, GB, I mean, all JPY pairs, GBP, JPY, Euro, JPY, had crashed to an all-time low for JPY because of that. It wasn't all-time low, all-time high for JPY. Because if JPY pairs go down, it means that Japanese yen appreciated. So that night, I know of a fund manager, very good fund manager, who almost every day he'll be posting the funds he's managing, how profitable he is doing on Skype in those days. After that incident, he wasn't showing up for a while. So eventually, it happened that incident affected him. He's a portfolio manager, hedge fund manager. That incident affected him. He wiped out the entire account because it was just in one night. People went to bed in the night. By morning, JPY had gone down. JPY, CAD JPY, AUD JPY, all of them had gone down to an all-time high and started coming back. In fact, they formed a hammer that day. So it took people out and continued in the direction. So you can imagine going to bed, seeing your trades in green, waking up in the morning, you are not seeing them in red, see your account wiped out. So day trading helps you to avoid overnight risks. And of course, it offers you the privilege of having to take advantage of multiple trade opportunities daily. Because in the daytime, for instance, us here now, you just you finish trading the Eurozone, you join the UK. From UK, the American session will start. Opportunities keep coming out, right? So cons, it requires quick decision making. So and it can be stressful. You can imagine, just like scalping, it can be stressful that you just sit down in front of a computer and keep checking for opportunities. So swing trading trades are held for days or weeks to capture price swings. So if a swing trader doesn't really care much about volatility, he doesn't care about volatility. What he cares about is taking advantage of these swings that they have, because when you look at your chart in either daily or weekly time frame, all that happening in 4 hours, in 1 hour, 50 minutes, all of them have been captured inside of the daily and the weekly time frame. So that's why a swing trader doesn't have to sit down and be watching. Like Warren Buffett is saying that he doesn't fancy himself sitting there in front of a computer and start studying charts flying up and down. So position traders and swing traders, they just look at it, okay, see where it's headed, get the fundamentals, and then make decision, and then go away. After once in a while, come and check. So the pros here are that, one, it's less time sensitive, and then it has potential. It gives you the potential for larger profits per trade. So because you are going to be analyzing with longer time frames, so, and the projections are usually higher. So, and then the cons, one is that it exposes you to overnight risk, like I mentioned when I was explaining the benefits for day trading. Overnight risks occur. Interest rates can be released, or one event could just happen overnight, like I explained earlier on, and that could actually affect the trades or your account. And of course, it provides fewer trading opportunities. So let's look at how you can develop entry and exit strategies in your trading plan. First, you can use technical analysis, or you can use fundamental analysis. And when you're using technical analysis, you may want to make use of any or a combination of the following key indicators, like the moving averages, relative strength index, MACD. You may use, like personally, I prefer just moving averages, just bring in 3 of them and use them to determine the trend and sometimes entry. And then there are situations where I say, okay, let me change my style. You may want to introduce RSI, okay, and stochastic oscillator. All right, so chart patterns, you want to study or learn head and shoulders, double tops and bottoms, and trend lines and channels. So you can use this now, because when you are talking about developing your trading plan, your trading strategy or system is important there, and it comes in here. What indicators or tools are you going to be using to determine the trend? What are you going to use to determine your key levels, where you decide to enter, and then what risks? How do you measure what do you use to determine where to set up your stop loss and your take profit? So these tools will come in handy for you. Okay, so for fundamental analysis, the key factors here are the economic data like GDP, inflation, unemployment, and central bank policies, geopolitical events, and so on. Then you can also combine both. Of course, it's advisable to combine both analysis. That's the technical analysis for precise entries and exits, while you use fundamental analysis to determine the broader market context. For instance, fundamental analysis can help you to determine the trend of an instrument. Then you now use technical analysis to determine where to enter. If, for example, now you hear that, okay, Friday is tomorrow, right? And the NFP reports, the unemployment rates, and so on. If the unemployment rate is high and non-farm payroll decreases, it's too bad for the currency. So that will already automatically develops a trend for the US dollar. But if unemployment rate drops, even if it's by 0.1%, and employment change increases, even if it's by 20,000, that means it immediately defines a trend for the US dollar. So in which case you want to buy USD against other currency pairs. So fundamental analysis help you to determine the broader market context. Oh, this has defined the direction. Then you now use your technical analysis to determine your size, entry, and exits. Risk management and position sizing in your trading plan. Now, risk management principles you want to bring into play when you are planning or drawing up or developing your trading plan. You want to consider risk per trade. You want to consider position sizing and stop loss orders. So you see that some of the things that we've done in the past, they keep coming back because they keep getting interconnected, interwoven together. So in risk per trade, you advise never to risk more than 1 to 2% of your trading capital on a single trade. So take note of that. If you missed the webinar we had on risk management, you want to refer to it. I think the recording is available in the members area. Position sizing, we also did that. All right, and the stop loss orders, we also treated that. So you need to just refer back to those. So regular review and adjustment of your trading plan, very important. Now you're going to be doing performance evaluation and then pick up lessons from your mistakes and then keep on adapting. For example, now let's say the strategy you're using is a 3 EMA strategy, and your risk management strategy also maybe tells you are going with risk to reward ratio of 1 to 1. Yes, there are strategies that can do 1 to 1 or 1 to 1.5 or 1 to 2. And then you now are using your strategy. And at the end of the month, it's important to do an evaluation because you have set goals. In fact, don't even leave it to the end of the month. Every day, every week, evaluation of your strategies so that you know whether there's a need for adjustments or not. And then where there are mistakes, identify those common mistakes and modify the plan to avoid repeating them. Okay? And then keep on adjusting your trading plan to reflect changing market conditions and personal circumstances. Because so personal circumstances may be that you, for some reason, your business is getting you more and more busy now. So you won't be able to sit down and be taking trades daily. So you want to adjust for swing trading or position trading. Or maybe now you have more time. So you want to start day trading from swing trading, and you want to also be doing scalping. So always adjust. And even as market conditions keep changing, you have to keep adjusting too. Keep adjusting too. Okay, so benefits of a comprehensive trading plan. Key benefits include discipline. A trading plan helps you maintain discipline by sticking to predefined rules. So you must have those predefined rules. For example, first rule, never lose money. In other words, never lose money doesn't mean you will not have losses. Never lose your account. Now, how do traders lose their money? By trading without stop loss orders. And when you trade without stop loss order, it's just a matter of time. If you're on the wrong side of the trend, it's just a matter of time and the market to catch up with you. But if you are using stop loss order and the rule says never you risk more than 1% per trade or more than 2% per trade, and you have $1,000 and 1% of, or let's even say 2% of $1,000 is $20. So if you enter one trade and the stop loss says 500 or let's say 200 pips, and the 200 pips now, if you go with 1.0, that'll be $200, and that'll be 20% of your 1,000. So you want something that will give you 2% if just in case you are wrong and you lose the trade. So that means you can't do 1.0 because 1.0 will mean 20% of 1,000. So should you do 0.1? If you do 0.1, that will be 20. So 0.1 will give you 20. So that means you can use 0.1 for that trade. If you use 0.01, it will give you 2. That means 2. And 2 will be 0.2% of 1,000, not 2% now. So always have your predefined rules. My rule is that I won't risk more than 2% of my account per trade. Consistency, keep on applying the plan. As you continue to implement or apply your plan, guess what? It begins to help you to be able to predict your results. It begins to help you to be able to predict your results. And that will connect the next one, emotional control, because when you have a plan and you stick to them, you are consistent with them, you are disciplined in sticking to the predefined rules, you are consistent in using them and applying them, it will reduce emotional decision making. What is emotional decision making? Your system says buy, and it gives you the level where you should buy. All right, and it says put a stop loss at this place, and you check the stop loss, it is 50 pips, and then put the target at so and so level, and if you check that, it's about 60 or 70 pips, and then the 50 pips now, your position size, maybe you have 200 or 300. If you want to risk at 50 pips now, 50 pips, if you do 0.1 at 50 pips, it will give you $5. And $5 in $100 from $100 will give it's about 5%. So that means you are risking 5% if you insist on 2% irrespective of your account size. So don't break that rule. Don't break that rule. But then if you think that 5%, $5 out of 100 is not too much for you to risk based on your risk tolerance, then you can make adjustments on the rule. That's the essence of that. So when you have worked that out and you stick to it, even when it's going against you, you won't make an emotional mistake of saying, well, since it's coming close, let me adjust my stop loss. Move further away, thinking that price cannot get there. There's no height or depth that price cannot get to. That's the simple truth. There's no height or depth that price can't get to. It's just a matter of time. It's just a matter of time. Okay? Then, as soon as you control your emotion and focus on the rules in the application of your trading, you see that your performance will improve. And as you continue to review and make adjustments, you continue to improve on a day-to-day, week-to-week basis. So there's a need to keep on adjusting. Don't just say, I've got the trading rule. I've got a trading plan. Nothing is foolproof. No, things can go wrong. So you want to adjust, make adjustments, evaluate, make adjustments, evaluate. There's never you feel that this thing doesn't need correction. It can be corrected. Okay. All right. In conclusion, there's a need to personalize your trading plan. Tailor it to your goals. So first things first, what is your goal? For example, this is September. In trading, how much do you have to trade? Because when you're setting your goal, don't say, I have $100, I want to make 1,000, turn it to $1,000 this month. No, don't do that. Yeah, maybe you have $100. Okay, can I make 10%, 20% of this amount trading this month? So that, you see, by the time you set this kind of goal, you have peace of mind. You remember that you're on a journey. You're on a journey. If you're able to achieve 10% of $100 this month, maybe next month you can increase it to 200, or you may repeat it for 3 months, and you are consistent with it, following the same plan. Okay, now let me increase it to 500, to 1,000. From there, and you maintain that. You don't see money and you begin to increase your lot size to hammer it, because that will just be a recipe for disaster. And then stay disciplined, adhering to your plan, because that's the key to achieving consistent performance. Once you stick to your plan, no matter what happens, sometimes the plan you know that the trades are inside of your plan and goals. So sometimes one trade can lose. That shouldn't make you lose your cool. That shouldn't make you lose your cool. And then keep learning, because it's a very dynamic market that we are playing in. As you continue to learn, attend webinars like this, read materials, watch videos, watch strategies, attend sessions. Sometimes you want to just pay to listen to somebody that you want to gain from their experience. Or sometimes you just pay for a particular subscription. Just let me see what something new I can learn from you. Keep learning. Never stop learning. All right. So final thoughts. A goal without a plan is just a wish. So if you say, I want to make 1,000, I want to turn $100 to $1,000 this month, what is the plan for that? Let it be on paper. I mean, let the plan be clear. Do you get it? So turn your trading goals into reality with a solid, well-structured plan. Turn your trading goals into a reality with a solid, well-structured plan. Many traders have goals, but they don't have a plan, and that's a big issue. So we're going to the Q&A session, and I want to sincerely appreciate you while I welcome your questions. So I'll pause here and let's see if there are any questions. We'll address them. Like I mentioned earlier in the beginning, that this session is more of theory, and you want to appreciate it. Don't just say, it's practical. These things are things you need to go and practice. You are the one that will produce the practical. Thank you and God bless you.
Okay, Mr. Ola Godpa, your question is it possible for one to do Forex as a full-time and be successful? The short answer is yes, but I will let Mr. Ifeanyi say more on that.
Okay. Is it possible for one to do Forex as a full-time and be successful? The answer is yes and no. It depends on you. Like today, we've dealt with trading plan. So what's your plan for making it a full-time assignment? Although starting out in the beginning, of course, you could start out part-time. If you draw up your plan, stick to your plan, it doesn't matter the storms, weather the storms. Yes, you can. You just need to have a plan and follow through with the plan. Trading, we have full-time traders, we have part-time traders. So you can. All you just need is, what is your plan? Like I mentioned earlier on, don't use $100 and tell me you want to be a full-time trader. Do you get it? Don't carry $100 or $1,000 and say you want to be a full-time trader. Yeah, you can actually do $500 now, depending on what's it called now. Let me break this down. I don't know what's your what's it called now. Your power, your confidence is, your consumer confidence is. That's your economic power is like. I'm going to place you on, say, $1,000. You have $1,000, and you are alone, for instance, and your monthly expenses, you can cover it with $100. Now, if you are in Nigeria now, and $100 in Nigeria is about 150K, and you think that 150K can take care of your needs at the end of the month. So the question is, how much can I put in to enable me generate this $150 or this $100 a month? If I have $500 in trading, is it possible for me to generate up to 20% of that in a month? With discipline, yes, just drop a plan. It's not a case of every day you must show up in the market. You want to plan yourself and decide on which days. There may be no specific days, but you just want to work out on your plan which particular setups can I stick to, and you stick to those setups. You find out that if those setups are consistent for you, maybe at the end of the day, $500 can give you $100 in a month. It's possible. Do you understand? And you collect that. So $100 today is over 150K. So, but if you have $1,000 and you want to repeat the same thing, maybe $300 in a month or $250 in a month. Think about that. Some people's salaries are not even up to 100K. So it's possible. All you just need is discipline, but there must be an investment you put in. And that investment, like Warren Buffett said, 2 rules of investing on investing he gave. He said, rule number one, don't lose money. Never lose money. In other words, never lose your capital. And rule number 2, say you should remember rule number 1. So in other words, there's just one rule. Make sure you don't lose that 500. You can't, I won't tell you that with $100 or $200 or $300 that you can be a full-time trader. But with $500, yes, if your cost of living, maybe you are alone, is $100 a month. Then, yes, you can. You have $10,000. You can plan, maybe this can give me 10% in a month. That's $1,000. $1,000 is about 1.5 million today. The family man can run on that. So it all depends on how much are you putting in. And when you put in there, protect it. This one is not a case of everything you see, you do as bows. You want to, what do you call it? You want to, what's that slang they use? So it's not that type.
That can better lot.
That can better lot. No. Be consistent. Be consistent with your risk management. Yes, you can. I think the question is answered.
Mr. Godpa, I believe that question is answered. Israel, you have a question, please ask your question.
Yes, please. I want to ask about psychology. What is the plan for a better trading psychology? How does one really not get emotional about trading?
Okay, I would allow Mr. Ifeanyi to answer that.
Let's do it this way. First off, let me give you a breakdown. There are 3 sides or three segments to trading, so to trading success. The first thing you need there is your trading system or strategy. The next thing you need there is your risk management. And the third thing is your psychology, trading psychology. And do you know that of these 3, your trading system just contributes about 10% to your success, while risk management contributes 20%, making it 30%. And the remaining 70% belongs to psychology of trading. Why? Because your trading psychology is about you, and you are the system of systems. So how do you go about developing it? It's a process. It's a journey. It's a journey. All I can give you is a tip, but you are the one that will work on it. Let's say, for example, you have a trading system, that says, okay, let me use a Fibonacci trading system, for example, retracement trading system that says, okay, you can only take trades on Fibonacci retracement at 38.2%. That's what your system says. Okay. And then gives you the other parameters for stop loss and take profits. And the system tells you that you should never risk more than 2% per trade. That's in terms of stop loss. And I can do 1 to 2 risk reward ratio. So that's this. That's the risk management that's coming now. The system has given you the rules there. And the system also says, well, you can trade gold, you can trade GBP USD, Euro USD, and so. And then the system says, for a beginner, please stick to just one instrument at a time. Maybe when you begin to get advanced, you can begin to adjust. Now, discipline or trading psychology, because when you talk of trading psychology, discipline must come in. Discipline now means that, one, you must stick to these rules. The rule number 1 says, except price gets to a retracement of 38.2% and you see a sign, maybe like a candlestick that shows, maybe if it's falling, it shows a shooting star or a bearish engulfing, or maybe if it's rising, that fall down, you have to buy. It shows you a hammer around that place. And maybe tells you another indicator should be there too. Discipline says you must stick to that. If it shows there and it is not, none of those patterns show up, discipline says don't trade. You wait. One day may pass. But the day it will show up, you just enter, you just find as soon as you enter, boom, it picks your trend and start going in your favor. So maintain your psychology. Then as it's going in your favor, you don't go and say, let me double it because it's good. That's maximum mistake you should enter. Make sure you maintain it, no matter how good or sweet it looks. So that's how to work on your psychology. And then set your stop loss where it should set it. Where it says you should set it there. If it goes against you for any reasons, allow it to hit it. That is a target. Plan for the next trade. That's how you begin to work on your psychology. Start with demo trading. The challenge we have is most times we don't demo trade. Demo trading is part and parcel of trading. If you want to really do well, implement all these things in your demo trading. Don't try something else in the and come and do another thing in live trading. Practice these things I've mentioned in demo trading and then bring them into live. And you find out that gradually, your system, body system, your mind, your intellect begin to adjust to it. Over time, you find out that becomes you. I believe this is, at least I just give you our tips. But then the process is you have to keep on doing it, keep on practicing it. And that's what we want to be doing even in our trading room. Give this and then encourage you to keep on putting it into practice. In the course of time, you find out that you become that master you are looking for.
Thank you, Mr. Ifeanyi, for the response. If I may add to it, do you want to say something, Mr. Estra? Your network is a bit bad, but if I may add to it, Mr. Ifeanyi, I want to add to it that if you are trading with money you are supposed to use to feed your family or your child's school fees or borrowed money, your psychology is already messed up from the beginning. So you have to be trading with spare funds, spare cash. You know, that's when your mind is at rest to start with. So I believe I'm correct, Mr. Ifeanyi.
Absolutely. I forgot that. Absolutely.
Yeah.
Don't carry your school fees or your rent or your children's school fees or money for feeding or money somebody gave you. Somebody did that many years ago. He wanted to travel to Canada and they needed to see his bank account balances for visa approval. So he appealed to somebody and the person actually transferred 2.5 million to his account just for account verification to be sure that you have such amount in your account. And guess what? Temptation came. I put it with this and double it. And they just returned. And he actually converted another man's 2.5 million into trading. And guess what? The man can never be arrested. In 1-2 trades, the account was wiped out. Then Canada, travel again. And he became a debtor. So what he says is absolutely correct.
Thank you, sir. Is there any other question? Any other question? Okay, I'll quickly move on and share a few other stuff with you. Thank you so much, Mr. Ifeanyi, for that session. For those of you that started together with us, I said this is being hosted by Pips O'Clock. And
Hello.
Okay, do you have something to say, sir?
Just one last question. Sorry
Okay,
to cut you at this time.
go on,
My
sir.
question is now we talk of spare cash that you can use to trade. Now, okay, let me say I want to spare $100 or $200. Can I grow that account over time?
Okay, Mr. Ifeanyi, please answer this.
Sorry, can you grow $100 or $200 part time?
Yeah, so that let me say I have $100 or $200 life trading account. Now it's a spare cash for it's a spare cash for me. So it's not school fees or house rent or feeding money. I think my psychology is at rest. I've got other things. Can I grow the account gradually by $5, $2, $3 over time?
It's possible, of course. Just be disciplined and stick to the plan. Make sure you have a plan, make sure you have a good system, and then stay disciplined on them. Definitely. If your plan is okay, let me just be making this. Okay, let me just give you an instance. Like now, if I'm to start with you, for instance, I say, okay, let's trade together. Knowing, okay, you're just starting, I can say, okay, we're just going to be going for 20 pips a day. 20 pips a day. So once, and it's easy to pick 20 pips. Just keep waiting. Once you see the opportunity, you grab 20 pips. Oh yeah, let's go. But guess what? Most beginners will say, if I could get 20 pips so easily, why not wait and collect another one? And that's how the challenge, that's where the challenge comes in. So if you are saying, okay, 20 pips daily, 20 pips could be $2 based on $100 you're targeting, okay? Yeah. So $2, you pick it and go, pick it and go, pick it and go. At the end of the week, if you do that daily, 20 pips per day could amount to $10. You get that? Yeah. But the challenge is when I just got it. It's so easy. Particularly when you're targeting 20 pips and it gives you 50 immediately. Wow. Let me go again. Before you know it, $100 would have become $200. But then the next trade, they wipe it all out. So just stick to that plan.
All right. I believe that question has been answered. And as I was saying, Pips O'Clock, we have training programs, articles, analysis, news review within the Pips O'Clock member area. And webinars like this, we do it every week. We also do mentorship and we give trade signals. We actually have, I know that one or two people here are part of our September signals group, and it's just a signals group for those who want to join us in a private group to trade for the entire month of September. If you still want to join, it's just 30,000 naira to subscribe, and then you fund your account. We do say fund your account with like $100 and above, so that you can enjoy the signals that are shared during the period. If you want to join, you can send us a WhatsApp message or send an email. You can still join between now and tomorrow. Tomorrow is Friday, yes. We started already. We started on Monday. So if you want to learn more, maybe you're absolutely new, you can also take up our Forex Mastery program. It's just 60,000 naira. You can go to pipstoclock.com/store. This is for a complete beginner. Then we have another course, which is for someone that has been trading. You want to learn different strategies. So we have the Fibonacci retracement strategy, the Fibonacci follower strategy, and a whole lot more. So you can take our first profit optimizer program to learn all the different strategies. We are partners of Skilling, and then if you want to, if you're already here, I'm sure you already have a Skilling account. Just go to skilling.com to log in, and if you don't know your password, just click on the forgot password link, and then you would be able to register. We're also partnering with another broker, which we've not made public yet, but we'll let every of our clients know as soon as we tidy up the entire process. Skilling is very good broker. They have access to over 900 instruments. Trading conditions are great, and then the competitive spread. They have competitive spread, and then the platform is very friendly. They have also the C broker platform, which is the C trader platform, which is an advanced trading platform, just similar to MT5. So at Skilling, you can take up to 1 to 1,000 for the leverage, and Skilling is regulated, very important. So for Skilling, if you have not made any deposit into your account at all, you can take advantage of the $30 welcome bonus. It's for first-time depositors, and that's when you deposit $25 and above into your trading account. Also, we have the 100% exclusive bonus for Pips O'Clock members. So if you fund $50 or $100 into your account, because you're a member of our community, we'll get you a 100% exclusive bonus on your Skilling deposit. So if you are not on our Telegram channel, please just go to t.me/pipsoclock, and then you'll be in our Telegram channel. The purpose of being in our Telegram channel is that we share quick updates with you, and on that channel we'll sometimes give free signals. So I really want to appreciate you for taking the time to be with us today. And next week we'll be covering another interesting topic. Our topic for next week is mastering market structure, the foundation of successful trading. Mastering market structure, the foundation of successful trading. You can register ahead and get the meeting details. You can do that by going to pipsoclock.com/member. Or just go to the website and click on the login link, then go to events. Once you get to events, you see the list of already scheduled events. Click on the event details, register. You immediately get an email containing the access link to this event. Usually that's the method to register, but sometimes we also share the event details on our Telegram channel. So that will be the end of our session for today. I really want to appreciate you for taking the time to be a part of this session. I hope to see you next week. Tell your friends about Pips O'Clock. You can always log in and see the entire resources that we have for you. I wish you a successful trading week. Bye for now. Enjoy the rest of your weekend.